Good morning, everyone. I'm not quite sure who he was talking about, but I'll try to meet his expectation. Welcome to industry leaders, academia, and our guests from East Africa. Can I welcome you again to Ethiopia, please, with a round of applause. The topic I was given, global dynamism and the changing world order. I don't think I need to tell you, the audience here, much about the topic, but I think in the eyes of the organizers, I'd like to say a few words about the context. As you know, the euro and the US dollar together made up more than 7 out of 10 SWIFT payments worldwide in January 2023. Outperforming many other currencies. This is according to a monthly reporting which is originally meant to track the market share of Ethiopians' yuan within international bank transfer system, SWIFT. Despite that, China ranks as one of the main economies of the world. The yuan ranked as the only 8th used currency for international SWIFT payments. The strain of steep US interest rates rises and sanctions that have frozen China out of the global banking system have seen a fresh push by the BRICS nation, Brazil, Russia, India, China, and South Africa, to challenge the dollar hegemony. Predictions about the BRICS countries as the fastest growing economies haven't quite panned out, but instead the alliance is now offering a diplomatic forum and development financing outside of the Western mainstream as we know it. In 2014, with 50 billion, around 46 billion euro in seed money, the BRICS nation launched the new development bank as an alternative to the World Bank and the International Monetary Fund. In addition, they created a liquidity system called the Contingent Reserve Arrangements to support members struggling with payments. These offers were not only attractive to the BRICS nation themselves, but also to many other developing and emerging economies that have had painful experience with the IMF structural adjustment programs and austerity measures. This is why many countries said they might be interested in the BRICS group. This is a very live topic as we speak. I will now introduce my panelists for today, and you're pleased to know that there are no presentations. And on top of that, Shizaz, who was also a speaker yesterday, will not be attending online. So I have speakers for today. Let me start with those that did not attend, that did not present yesterday. We'll start with our own Melaku Kebede, CEO of Hibret Bank. Mr. Melaku Kebede is currently CEO of Hibret Bank, formerly called the United Bank Share Company. He was Senior DCEO Strategy and Technology of Hibret Bank Share Company before December 2019 until he assumed his current position. Formerly, he was also Vice President of Technology of Zaman Bank Share Company in Ethiopia. And I think I won't read the whole profile, but let's welcome Ato Melaku, please. Our second panelist, Yared H.Meskel, CEO YHM Consulting. Yared is the founder and CEO of YHS Consulting, a firm that offers consulting and incubation services in Ethiopia. He has extensive experience in providing investment advisory services to local and international companies in various sectors such as startup, feasibility studies, strategy and development, technology sections, turnaround management, and equity and debt financing. He's a prolific writer and has authored many articles on peer-reviewed journals and on Ethiopia's economy, such as shared companies in Ethiopia and the need for secondary market in Ethiopia, revising the commercial code of Ethiopia, the causes and cures of Ethiopian foreign currency problem, regulation and innovative, etc. Please welcome Ato Yared H.Meskel. My other two speakers, were on panelists yesterday, but I think Can I introduce them again? Maybe your bio wasn't read yesterday. Ato Frezer Ayalew, Director of Banking Supervision, National Bank of Ethiopia. Mr. Frezer Ayalew has more than 20 years of experience in the financial sector, particularly in the areas of banking, microfinance in the central bank. He started to assume senior management position as early as 2010 as Director of Microfinance Supervision, and then became Director of Banking Supervision, MBE, from December 2019 to present. Ladies and gentlemen, please welcome Ato Frezer Ayalew. Let me try this one. Lwetabe, am I right? Alan is Director Investment Deposit Protection Fund of Uganda. He's currently working for the Deposit Protection Fund as the Director Investment. He is responsible for managing over $200 million in reserve funds for deposit insurance purposes. He previously worked as the Assistant Director Financial Markets at the Central Bank of Uganda, where he is responsible for managing foreign exchange reserves. Please welcome Mr. Allen. If I may, Dr. Gamachu, do you want to invite the Central Bank? Was it Central Bank of Uganda? Who's attending as an attendee but should be on the panel? Do you want to join this? Where is he? He's out? Perhaps he can join us for the Q&A. So, we have all the panelists on the stage. I think, because we don't have much time, let me join them. I was going to say, welcome, ladies and gentlemen, but since there are no ladies as the panel, welcome, gentlemen. I think the objective of this, and I want to do it differently in the interest of time. The objective of this panel, generally, is the ongoing global dynamism is posing pressure on the global financial sector in different ways. The challenges are manifested in multiple fronts, including impact on economic sanctions, global supply chain disruption, inflation, stringent compliance and requirements, swift restrictions, correspondent banking issues, liquidity crisis, credit crunch, shortage of reserve currencies, and so on. On the other hand, there is an emerging multipolar world, order seeking for alternative arrangements of relationships. For the panelists I hope you will discuss the how in this dynamism is playing out for countries specifically in the region, specifically for Eastern Africa, and the respective finance sectors. I hope you will unpack what it means for the region in terms of challenges and possible opportunities, the implications of BRICS economics and its increasing dominance, as well as alternative mechanism that East Africa needs to consider to address the existing pressure on its finance sectors are expected to be unpacked for the audience today. So I'll give you 5 minutes each, and then we can go to Q&A. Can we start from the Yared?
Okay, thank you very much for this opportunity. Capital and everybody. I think we need to look at, we are on the birth of a new challenge. If we look at back, all the innovations and the revolutions have created inequalities. Gunpowder was the big power, slavery and colonization, and then whatever it came, the last three industrial revolution were a part of creating, multi-layer society, and then Africa had been on all situation was on the receiving end. So the fact that we were not a part of those revolution had made us disadvantaged in Africa. So what's now happening is there is an emerging force, industrial revolution, this digitalization, cryptocurrency, and make it even difficult now to catch up with the rest of the world. So particularly if you see the East African banks are too small. Even the African bank, the whole African bank is less than one Chinese bank. So we are in a very difficult situation. So things are going. And then also we have gone through 20th century, which was an ideological century, where was three big ideologies, was Marxism, liberal democracy, and fascism. So we thought that that's the end of the world. Fascism was defeated when Italia was defeated in Ethiopia in 1941, and Germany in 1944. That was the end of the fascism, the right-wing ideology. But the world was divided into the communist bloc and then the liberal democracy. But in 1991, the Soviet Union collapsed, the Eastern Bloc collapsed. We all thought that we're going to live in one, liberal democracy where there is no, conflicts. I mean, that's why, the end of history was written by, the American. So, but now after 30 years, 1991, 1918. 2018, 2020, we are seeing the new birth of a new ideology. If you see like the Alexander Dugin, the fourth political theory, and sort of, there is an consensus that liberal democracy without opposition is not going to be as good as we thought in the past. So that's why now the influence of controlling the SWIFT, using the economic power onto some of the as a political tool, the economic is creating. So that is creating now a multipolar world back to pre-1991 situation. So that's why now the BRICS country, Russia, and all that Chinese emerging markets are trying to create alternative democracy. But so far, it's not backed by ideology. But eventually, this is the birth of a new conflicting world. So Africa will be again once more trapped into, competing global power. So unless we Africans wake up to this reality and then catch up with the problem, it's going to be a tough time ahead. Economically, it's, the whole African bank is about 100, it is not 1% of the global banking sector. There is now quite a lot of disruptive technologies coming every day. And then, the Chinese bank, the biggest bank, is about 5.5 trillion. So in that reality, what are we going to do? But we are not the first one to discuss this situation now. When I came in the morning, I was trying to to do a bit of research. And then luckily I found Emperor Haile Selassie's speech in 1963 at the inauguration of the African Union. Unless the Africans wake up to realize, the economic challenge of the African and become economically independent, the sense of we have achieved, political freedom is not going to give any dividend. So, I mean, looking now 60 years behind, we're not having any say in the global economy. We're not having, a fair share of the economic benefits of the world. So this is now a big challenge. We have to look at it because all the shift, East Africa, for example, is a big opportunity. I mean, Ethiopia economy, Kenya is growing. Most of Tanzania, Uganda. You don't find a lot of data about Eritrea and Somalia, but it's reasonably good. About 470 million people. It's bigger than America, in terms of population and so on. But economically, we are too small and too fragmented. That's why the East African banks, they have to look at, the Pan-African view of 1960s, which was, never materialized. So they have to look at cooperation. They have to break down the barriers. So, there is no trade within African countries unless they break the barrier and then trade with each other. The bank service will not be also efficient. It's just not the only transaction of, cash, but they have to be a transaction of cash, goods, and services. So these are the situation. It's not that much encouraging, but this is another challenge for this generation. So Africa, in fact, on that speech, I think I just want to quote what Africa is unmade. Just let me read you the Emperor Haile Selassie's speech in 1963. It's just not far from here in Africa Hall. In a very real sense, our continent is unmade, still awaiting its creation and creators. It's duty and privilege to rouse the slumbering giants of Africa, not to the nationalism of Europe of the 19th century, not the regional consciousness, but a vision of a single African brotherhood, bending its united effort towards the achievement of greater and a nobler goal. So there has to be competition as well as cooperation within African countries. I mean, now it's just about some of the barriers are opening. I mean, M-Pesa is coming, Ethiopia Telecom need to go to, Kenya, all other service providers has to be, competing, and then also innovating. So the ultimate wealth is knowledge. There is no doubt, gold is not world, Silicon Valley is sand civilization, silicon oxide. So people have come up with the idea of making sand into microprocessor, limestone into cement, and so. But in terms of resource efficiency, we have 90% of platinum in Africa, 50% of gold, 35% of uranium, and so on. So, I mean, we can put a lot of statistics, but what is missing the last generation of Africa in the last 60 years is the thoughtful action. I mean, the political leadership as well as the business leadership went into the wrong direction rather than creating a vision and then using the human power, the intelligence of the population. It was into corruption, political division, tribalism, so on and so on. So we are now not far from where we left 60 years ago. Thank you very much.
Good afternoon. Good afternoon, ladies and gentlemen. Once again, thank you for having me in Addis. This is my second day in Addis, and I'm enjoying the weather. In terms of our topic today, global dynamism, the emerging world order, I have a couple of thoughts that I have written down that I want to share, which will shape my conversations. For me, the last 3 years have been instrumental in changing the world that I have been investing in. I've been largely a global investor focused on foreign reserves. And over the last 10 years, global financial crisis 2007 gave us zero-rated markets, zero yields, negative yields, up to until COVID came through. But with the onset of COVID, the lockdown of different economies, those 2 years were lost. And as we are digesting the impact of what that meant to us, we then get into a new crisis through the Russia-Ukraine war. So we have these 3 years that have different implications for us. COVID brought on board the usage of the appreciation of data, big tech, in the way we do ordinary business. If we look back in 2019, most of us were still paper-based. And today we do meetings online, Zoom, Teams, Google Meet are really common today. And for me, one of the key things that strikes for me when I look at the global dynamics is that as low-income countries, we are being overwhelmed by big data and big tech. If we look in this room, everybody has a WhatsApp. That's an American company. Your data is in servers maybe in Canada. If we look at the amount of data we provide on Zoom, we discuss very vital meetings of national interest on a platform where we don't know where we are saving some of this information. It's on cloud based in maybe Singapore. So for low-income countries like ourselves, we are really exposing ourselves based on the shifts that have happened. They have been rapid, but they have also brought some risks for us. For me, the Russia-Ukraine war has highlighted a weakness for low-income countries, that a decision can be made in Washington and the whole country can come to a standstill. And we have seen the weaponization of the dollar, the weaponization of SWIFT, where countries are being locked out to access global markets through payments. So for me, that raises an area for us to explore. As Africa, are we in a strong position to impede or stop another country to limit our access to global markets? Perhaps it's important that we also think of an alternative to SWIFT, Even if it's continental only, it could help us do Africa trade if we are locked out of global trade. But the other issue that I see is the emergence of a bipolar world. On one side, we have the US and its previous allies and new friends like Japan. And we have on the other side China with its friends from the 45 era. We have Russia, South Africa, Brazil, all coming together to create the BRICS side of the story. But the picture is not clear in terms of who is standing where. And Africa is lost in this conversation. This morning, the president of South Africa visited Ukraine. This is in 15 months of the Russia-Ukraine war, an African president is visiting Kiev. Now, as Africa, is the president of South Africa representing African views, or is he representing South African views, or is he representing BRICS views? It seems Africa doesn't care on what's happening on the global stage because we take our time to engage, and when we engage, perhaps the voice is a lone voice. So again, this creates something that we need to think about as we are looking at global markets, international markets, and integration. What kind of voices do we want to send out there? What are our African interests? What is the Ethiopian interest? What is the Ugandan interest when we think about global dynamism? And for me, we are going to be placed between a rock and a hard place. The US on one side, and China, a new friend, on the other side. We are really going to get squeezed unless we reorganize and understand what our interests are. But I'll close my thoughts on how I'm seeing big banks or big central banks positioning for the risks that are happening. The big central banks, China, the People's Bank of China, the Russian Central Bank, banks in the UK, the central bank in Switzerland, they are all buying gold. They are all increasing their allocation to gold, but what are African central banks doing? We are increasing our allocation to hard currency. We are buying more dollars, we are buying more euros. What does that tell us? The owners of euros and dollars are buying gold, and for us who have the mines are buying more dollars. It tells me that we might need to rethink how we position and how we prepare for bad days. The bad days will happen. We are in countries that are volatile. Tomorrow my president may not be in good books with Washington. How do I ensure that we are able to pay for goods and services? That is the kind of thinking we need to have. By the way, Uganda already has problems. We have enacted a law against LGBTQ. So we're already having issues about access to some of these things. So we see the risk is real, that even as African central banks or governments, we need to understand and appreciate the pressures and the interests at the global stage and present ourselves accordingly. The last point is around digital currencies. They are likely to constrain African governments, especially the global digital currencies. We have the digital euro, the digital dollar, digital yuan. It's going to mean that in Ethiopia, you may choose to use the birr or use a yuan for transactions. But what does that mean for the Ethiopian government? If you want to tax a service that's offered online, paid in a currency domiciled in Beijing, do you have authority? So we need to appreciate the changes that are happening and prepare accordingly. And for me, those are the key points, the key insights that I feel we need to be touching on further. Thank you very much.
Good morning. I think it's a very challenging topic that Dr. Gamucha has given us. It's a kind of fireside talk, but I will try to discuss what I have on my fingertips. I want to come from the extreme pointers who are advocating for money democratizations. People who are saying that don't allow our kings to make our money. Some 5 or 6 years back, I was a panelist in Rwanda, Kigali, and the discussion was on cryptocurrency, DLT, blockchain, and so on. And some of those guys, panelists, were talking about they are working on mining, cryptocurrency mining. And the whole idea that they are talking about is we, as an individuals who are using the money, is being manipulated by governments or kings or so. So we have to liberalize our service from them, and we have to create what they call it MOAP, or those technical people, you know, voice over IP. Similar to voice over IP, they are talking about money over IP. And in that line, they are detaching themselves from control, governance, and so on of the government. So when I discuss later on after the panel with them, the whole idea is why they opt for this, to have a kind of different currencies where they can use it on a dark web and so on. It's all about liberalize or avoiding from dependency on individual privacy and so on. Why am I allowing governments or kings and so on to know my wealth, my cash, which I have in a pocket? Our fathers and sisters used to barter with metal, salts, and so on. So I am now looking the current situations that is going on by Russia, China, and so on is, I would say, to free up themselves from dollarizations, where they have much dependencies. Some of the statistics that Dr. Gamach was telling us, like the number of traffics that we have on a SWIFT, 70% goes to dollar. In fact, some of the articles, it says 2/3 of the dollar is outside of USA, and it is highly dependent for the other countries, like especially Africa and other part of the world. Even the global reserve account is more than 73% of the global reserve account is maintained in dollar. That tells that by the one who is owning the dollar or manipulating the dollar definitely can deny the policy independence of a country. In 2014, when Russia was treated to be cut from the SWIFT, Russia formed a SWIFT similar technology, and the same has been done also by China. So the reason that I am telling all this is when there is dependency or policy dependency, country or individuals, to free up themselves, they have to come up with a new idea that can free up them from dependency. So I see the last 3 years phenomena that we have seen is the formation of BRICS and the formation of a development bank by the $50 billion, and all others, I think many countries are also joining them, is to create an equivalent of a kind of IMF or World Bank to balance those monopoly or those dependency that they have. So the whole drive is being done is by countries. It's a matter of choices. Which one is better? There is advantage and disadvantage. Of course, when countries are shifting to another currency, be it unicurrency or bilateral currencies, definitely the currency fluctuations, cost of service, and so might be high as compared to the ordinary use of dollars. But it becomes demanding this time, at least to reduce the amount of settlements with dollars. That's why yesterday when Dr. Gamach started on the speech of Ruto, why people are using dollar for neighboring countries. A month back, I was in South Africa, and one thing which I was surprised is there are 11 countries in the SADC region, and they are using settlements with rand currency. Probably the clearing parts, the conversion exchange rate might be used through currency, through USD. But the settlement that they are using, Zambia has a kwacha, and at the end of this cross-border settlement, they are using rand, not a dollar. Those tendencies where regional countries are working together and so on, definitely there will be reductions of dollarization or de-dollarization. This is a kind of survival, and it's an attempt to be done to free up from the dependency of monetary policy. As my friend was saying, something that have been articulated by the dollar owners might affect many countries like Africa and so on. So how we look at it from Ethiopia and East Africa region is collaboration. At least the regional trade services that we are having, where the settlement, at least the settlement be with our own currencies. The clearing might be based on later on when money markets between those neighboring currencies are there, we might not use through currency conversions. But at least if we reduce our settlement amounts, definitely it will free up most of the countries like we have seen in SADC regions. This is what I am reflecting, and every nation, every country has to look at it, especially for regional integrations, and finally having another integration among the regional, which will be the vision of Africa Union. This is what I want to reflect. Thank you.
Okay, thank you very much for having me again. So I will be focusing on the financial stream where I'm coming from, and I will be reflecting some issues on this aspect. So as has been said by Madam Chairman and the colleagues here in the panel, so the global pandemic, mainly the COVID and the Ukraine-Russian war has significantly and disruptively affected the global supply chain and the way business are conducted worldwide. If we look at the banks have been affected in terms of their asset quality. That's caused by COVID, and that's why a number of jurisdictions have undertaken regulatory forbearance measure, including Ethiopia, in order to rehabilitate these businesses and improve their credit quality. And if we look the case of US, still the work from home aspect has continued in the US environment, and a number of people are increasingly worried that the commercial real estates in the US are still continue to be unoccupied, and this might lead to increasing the credit risk of banks that have underwritten loan on those commercial real estate. So the impact is still being felt in the US environment. And then we are also witnessing heating up of housing market in the US market, and then there is also another round of fear that there might be a chance that this might not end in a bubble that caused the financial crisis in 2008. So these are like some of the global developments that we are seeing, at least from the big countries' perspective. And right now, as you have heard, we are witnessing that some banks have started to fail in the US and some other European countries, notably the Silicon Valley Bank in the US, and there are different causes for that failure. First, these big tech companies and the startups have been growing so rapidly, and they started to put lots of deposit in this bank, and then this bank is required normally to invest this fund because it needs to shift this into earning asset, and because of that it purchased a government guarantee, and its exposure was very high. So when all of a sudden the interest rate increases, then the board price fell down, and then the failure happened. So this is the first bank that has been recently closed by the regulator in the US environment. So what caused this failure will be an interesting lesson for us. So the first one is there is a growing and rapid expansion in the exposure of banks that is not matched with the risk management capacity of the banks. So if this growth is not matched with the capacity of the banks, then it will be unhealthy development and it will end up in this kind of failure. So this is one thing. The other issue is the issue of digitalization. So what I wanted to say here is back days when people feel that there is increasing risk in banks, and if they need to withdraw their money, there is a need for them to go to the banks, queue, and and withdraw their money. But this time there is no need to do so because of the digital transactions, and simply people were withdrawing their money from the comfort of their houses using this digital transformation, digital services. And just in this bank, in this Silicon Valley Bank, 46 billion US dollar was withdrawn just in one day using these digital channels. So this is rapidly increasing the behavior of depositors and how they are going to respond to this situation so quickly. So this is a big alert for commercial banks that are operating in Ethiopia and in East Africa as well. The other lessons that we can share is that I think we need to be watchful of who our depositors are in this emerging global world. So if our depositors are those corporate customers having huge money, and if there is huge deposit in the books of our deposits, then there is a danger in it from us seen from this failure, because first these days it will be very easy to exchange information with the digitization and the social networks that we are having. So people will exchange information about the performance of a bank very easily, and as a result that can be translated into deposit withdrawal, significant deposit withdrawal using digital channels. So this is a huge alert. With regard to the de-dollarization of the currency from the global perspective, as you know, due to the increased polarization that's happening, and then the sanctioning of countries, and also due to the foreign exchange reserve challenge that some jurisdictions are experiencing, there is a felt need to decrease the level of dependence of countries in dollar, in the US dollar particularly. So from African perspective, there is a big initiative that's going on, as has been said yesterday, the African Continental Free Trade Area Agreement that's being championed by African Union. And the whole objective of this is to allow intra-trade within African countries. So this will technically reduce the level of dependency of these countries in dollar, and it will release some dollar to them. The other issue is with the BRICS countries, they are also moving towards having a common currency that will decrease the level of dependency of these countries in dollar. So these are important developments that are going on. But just to summarize what I can say, so the first lesson that we can take is, some of the failures that we have witnessed in the US were contained because of one, after the 2008 financial crisis, the regulatory framework has been tightened up, and there is increasing requirement to adopt international regulatory standards like Basel II and Basel III. And these are, one of the main reasons that helped, the risk to be contained in few institutions. So we need to increase, adoption of international standards like, the Basel Core Principle 2 and 3 for our jurisdictions in East Africa. And then the other one is, the issue of, deposit insurance. As has been seen in the US experience, even in the Silicon Valley experience, only 46% of the deposit were insured with this deposit insurance. And a lot of countries are reforming how the deposit insurance fund is going to serve this purpose. And finally, we need to be very vigilant on how depositors are reacting to how are performing. So because of the digitization and because of the fast exchange of information using the social media channel, in 2008, the failure came from, valuation issues. But right now, there is increasing, expectations that, the next financial crisis might happen because of issues that will emanate from deposit and how depositors will be, behaving using this, digital era. Thank you very much.
Thank you, gentlemen. I think I made my work difficult because I'm going to try and summarize what the four have said. I think let me start with that. Yared, he pointed out, I'm not going to try and summarize everything they said, but he pointed out that in the context of Ethiopia, nothing has changed since the 1960s. That's really like a bullet in my heart. Where did the leadership of Africa go since the establishment of the AU? And he quoted our emperor's speech, I think. So I think I'll leave you guys to pick up on that. Alan highlighted all the issues in terms of globalization, where we are now in terms of the bipolar world, Africa being stuck in the middle, and what we're doing. But I think and I'm hoping that the audience will pick up in terms of solutions. Are we really as industry leaders leaving this to policymakers and our governments only? Or what's our responsibility to further discuss this? I think one of the things that I want to highlight in the context of Ethiopia, as you know, even from yesterday's discussion, we're always late to the table. But we do have a competitive advantage in terms of doing it right the first time because we're late. Having said that, though, we're looking at now opening our economy for the first time. The private sector was shouting, the industry leaders were saying, look, we can't continue like this. And then suddenly the government decided, no, we're going to open up now and we're going to open it up today. So now the private sector is trying to catch up. So in your experience, Alan, perhaps you can look at the solutions. Did the country, will the opening up of our economy or liberalization of the financial sector really help in terms of wealth creation for the citizens? It's something perhaps we could look at. Melaku, you've looked at many discussions from 6 years ago and where we are now, and we're still discussing the impact rather than, I think, putting place the relative regulatory issues. So again, for you, who is responsible to do that? Frezer, you talked about the banks that are, the banks that have the closures of the banks in the U.S. as an example, and perhaps what is the lessons learned there in terms of adopting international standards, regulatory issues in Africa. So not necessarily in the context of Ethiopia, also, but the East Africa. I'd like to highlight and perhaps question who set the Agenda 2063 in the African Union? African Union's budget doesn't come from Africa, right? So are we comparing African Union to EU? Is that the correct correlation? That's a question that I have all the time. What have we done with the East Africa community? Have we succeeded with that? What happened to the Western Bloc? What happened to SADC countries? Is that something we should be looking at? Horn of Africa, we're always trying to fit somewhere. But presumably now we've signed to Africa Free Trade Agreement, so it's Africa as a whole. I met somebody from Uganda yesterday from the parliament. Faith, I need you to tell us that example. Have we really succeeded? So it's like it's good to have the regulatory issues and the agreements in place at that level, but bringing it down to the communities, is that something that's going to be challenging for us? So I'm going to leave you with that. So this time around we're going to take a lot of questions. So I hope you're ready. Challenge the panelists, please. So let me see your hands. Okay, 1, 2, this side.
All right, thank you, it's working. My name is Lwetabe from Ipswich, and thank you, the panelists and the moderator. My question actually raised from the concept that you mentioned, and I like the idea of we need to have a replacement of a SWIFT kind of system, Mr. Allen mentioned. And we need to do a settlement using our own currency. And Mr. Melaku mentioned, I like those. Yes, we have to do that. We have to do transactions between Ethiopia and Uganda in our own currency rather than dollar, between Ethiopia and Kenya using our own currency and doing a settlement. And there are initiatives with regard to this area. There are initiatives between, I think, in COMESA and CBC, they are doing that for regional payment and settlement. And there is also an initiative at the continental level, Pan-African Payment and Settlement System. There are currently active cases that we can also consider like South Africa and SADC, 11 countries, as well as the Western Africa. But I think this is a duplication of effort and resources. Don't you think, bringing them together and focusing on one so that we can efficiently utilize our resources and investment than having here and there different initiatives for a similar subject? That's my question for Mr. Allen and Mr. Melaku. Thank you.
Thank you, everybody, especially the moderator and the panelists. I have two questions for Allen. I need your experience. And as a regulatory body, Mr. Frezer. The first one is for Mr. Frezer. In nowadays, Ethiopian population growth is around 120 million, and the population rate is 2.5 rate, which is more people live in urban area. 21% of Ethiopians are live urban area. The rest, 79, around 79, rural area. So infrastructure is one the driver to liberalize the finance sector ecosystem. What other sectors working to support the liberalization of finance sector? In my belief, their role is more important to liberalize financial sector. The National Bank or the other finance sector demand only not change to bring the East African, also the Ethiopian finance sector. So other institutions are important to support the idea. The second one is, Mr. Allen, I need your experience in Uganda. The developed countries, especially Eastern countries, not need Africa to put a long-term plan. They always, Africa should be depend on them. They need always Africa depend on them, and due to globalization, most Africans are already colonized in different way. But now we need to liberalize the financial sector. So if you have any experience in Uganda, to liberalize the finance sector, it needs to attitude change of the citizens to understand it. My question is there any institution established in your country to work with the finance sectors to change the citizens' attitude? That's my point. Thank you.
Thank you, moderator and the panelists. I am Nakut Faith, a legislator from Uganda. The reason I came to this summit was to understand the bottlenecks for the African economic integration. For a long time, our political leaders have raised their voices, and the voice is becoming louder by day on what the problem is if we continue operating in silos and what needs to be done urgently. But it appears their voice is not being understood by the people or by the players who are expected to lead the process. So I came here to understand what the bottleneck is. While the politicians think that it is us in this room who are the sector players in finance, they think that it is us to lead the process. We also think that they haven't understood us properly. So what is the bottleneck? Throughout this summit, it has come out clear that unless something is done within the East African bloc and within the African continent on the question of integration of our markets and our finance sector, we will continue to be puppets to the rest of the world. Now, we know what should be done, but we are not doing it. Who is responsible? Who is not doing what is supposed to be required of them? Is it that the politicians, our political leaders, are pretending, only explaining rhetorical statements that we must unite, we must trade within, we must use our local currency, and going back to do politics behind and restricting? Is it them? Or is it us, the private sector, the heads of financial institutions, who are afraid of the risk of exploring to the next country within the African continent, within the East African bloc? Are we fearing risk? Are we protecting our small spaces so that we fear competition? What is the problem? Moderator, you had asked me to give the example of the East African community. It is true that we have pushed for this agenda for long. We want a East Africa that can work together, that where people can move freely, where goods and services can be exchanged, where trade will become easy, where you can use our currency in any part of the country. That's our wish, and that's the ideal. But is it practical? I'll give you a few examples. Recently, we had overproduction of milk in Uganda. But because we could not sell our milk to the nearby country, our farmers had to lose 300% a loss, and their milk got wasted within East Africa. And yet another country in East Africa needs to take that milk. I visited another country in East Africa. I had my Uganda shillings. I had to lose it in value, three times in value, because I did not carry the US dollar. But we are talking about the integration. We must integrate, we must unite, we must work together. When will this end? My proposal is this, that we take this conversation with the political leaders. Maybe the actors in the finance sector have not understood the politicians, or the politicians are pretending. Can we have an honest discussion among ourselves? The leaders here seated, we sit with our politicians and we unpack what we want, and we agree on action, and we see if it can work for the East African bloc and for the African continent. That's my proposal. Thank you.
Thank you. Moderator, you had invited me up in my absence. I will do my contribution from here. I would like to thank you, the panelists and the organizers, for this session. And I have a few contributions and questions from what has been discussed. My main contribution will take on from the previous speaker about the dollarization, and one of the panelists raised it. And I would like to share with the meeting or the conference, that the summit, that the East African community had an initiative of currency convertibility. And indeed, the MOU had been signed and started implementation. The results were really encouraging. What happened was, it was now possible for Kenyans and Ugandans, mainly Kenyans, to go to Uganda with Kenya shillings. purchase beans, purchase maize, purchase whatever they wanted in any place in the country. And that money was acceptable. There was no need to exchange to any other currency. And the alternative, and the solution was, all that money ended up at the central bank, which had the responsibility of delivering it back to the Central Bank of Kenya. And volumes grew by the month to the extent that we reached 3 billion Kenya shillings. You can convert that. However, taking on from the previous speaker, is it the politicians? Is it the technicians? Now, questions arose. Where is this money coming from? Is it money laundering? How come you're bringing too much? How come we are not sending this? And what happened? The EAC had to first put on hold the implementation of the MOU to sort out KYC, money laundering, and all those things. They are now at the state of restarting it. So in other words, there have been some efforts to improve inter-regional trade within the East African community, which had been formally signed and agreed by the East African heads of state. However, you've heard about the tariffs, you've had the milk, you've had the aflatoxins in the maize, and all those things. You know, there is still an element that the politicians need to come along with what is moving. Now, sometimes the results of this kind of activities create an imbalance, which creates discomfort in other countries. So that is what needs to be sorted out. But I can confirm to you that that had taken fruit. It's still working with Tanzania, but overall it is on hold. But I'm glad to report that the memorandum, the addendum has been re-signed. So probably it will start. However, going back to the global dynamism issue as being discussed, we are raising options or solutions. Let's get digital currencies. Now, my question is, are our economies structurally the same with the advanced economies? If we have digital currencies, what is the proportion of the unbanked population in Africa, in Uganda? Aren't we then going to promote financial exclusion? Or are we only going to bank the elite? These are the points that we need to consider as we say we are joining the global economy. Two, we have to look at the fundamentals of our economies. We joined the globe. How competitive are we? My recollection tells me that our biggest competitive advantage is in the population, meaning we need to prepare ourselves to yield from the population dividend. However, when you look at exports, we are exporting raw materials. When you look at all areas, we are not as competitive. However, when it comes to fast payments, when it comes to everything else, we want to be at par. But we are not earning. We are not self-sustaining. Most of our economies are dependent on donor funding. How then are we going to say that, oh, because there will be a sanction from US, then we can avoid it by having a SWIFT within Africa? Will it work? I'll give you examples. If you recall a few years back, there was sanctions. The US sanctioned Russia. This is not the first time. The US, not the UN. But it was equivalent to the world sanctioning Russia. You could not transact without your funds being confiscated. Why? Because we are in a global network. What am I saying? I think that we are already intertwined within a global system, which has already been set up. Unfortunately, because of where we are in our economic development and everything else, it will take us a tall order to get at par to what we want. However, that means that we need to start. But the starting point is not by fixing digital currencies, it's by fixing our economies, making sure that our economies are sustainable. So we've faced that. So I've raised the issues of digital currency, and then I'm saying that we need to look in-house. We need to be at par. Then we say we can compete. Otherwise, we are in this for a long haul. Thank you.
Thank you very much, all the panelists first, for staying with us starting from tomorrow. My name is Ayalew. I am the CEO for ISCD Africa, which works for innovation. I have few reflections on the issues that raised by the panelists. And first, I want to raise the issue of liberalization of laws, and policy innovation is very important to meet the financial sector success. For instance, we can rise about the challenges that are really facing on the initiative of COMESA, that, for instance, in COMESA, Ethiopia can trade its best export of sesame and oilseed to Egypt with potential of 8 million per year, whereas with 5 million of potential to trade with Kenya, here in our neighbor. But the challenge is the tax rates to trade with Kenya is 35% of the total produce, which is very high. So when we think of liberalization and the policy innovation, we have to also look for free movement of people, and there's the issue of taxation and the financial policies. Secondly, I think my reflection and some kind of question goes to our brother Frezer. He raised the issues of a very maximum number of banks are growing, and it's also might be the risk for increasing risks of these cyber crimes and crimes with mobile banking. So that I think as a policy specialist, I propose integrating the regulatory operation with private sector, like Raxio, a company that they raise the issue of data management and really cyber security. So I don't know what is being done across this context. Secondly, we are civil society organization working in reducing youth unemployment through increased entrepreneurship and innovation ecosystem. With that, I, as a CEO, visited Ms. Haregawen. She is the chief executive of Commercial Bank of Ethiopia, and she raised the issue of that the regulation is not allowing to do that, because we try to get a kind of collateral from the government or from the bank so that we can reach more young unemployed people. But she said there is no way, no policy is working. So I don't know what you're really thinking to adapt the policy and the legal framework in this respect. Thank you.
Thank you for the chance. My name is Worku. I am from the banking industry. I think I am the last speaker, and I don't think I have enough points to raise. But This is Pan-African discussion, and I hope people are not surprised if I overemphasize this. So Yared and Alan both scratched our wounds, and really I felt the pain that I don't know when will this maybe well-engineered vicious circle of exploitation will end. I say this because you both haven't raised the tangible solution for this. Maybe the tangible solution will be trans-generation projects that we Africans have to undertake as soon as possible to end this imbalance, this bias, global bias. So we need to establish trans-generation project that will enable us in terms of innovation, in terms of production of real goods and products. I think we will not progress much by talking only about currencies and the finance, but we have to be capable of enough to produce our own products, our own solutions, so that we will grow as soon as possible. The other is the focus. The focus, we need common focus as we raised in the form of regional integration, whatever. So these are some of the points that might have been included as a solution, as a tangible solution to go forward, and instead of discussing the problems now and then. The other thing is that I think we do not we cannot find sufficient sponsors for this. Some of the sponsoring objectives are maybe attention diverting. We heard a number of things this morning. This morning, I was expecting something on regional integration when FSD was discussing about a number of agendas on its table. Again, when I listened to that the thing of Bill Gates about banking without banks, that might not be relevant for me at this moment in Africa, because we still need bank branches all over the country. The other question that I might raise is for Mr. Frezer, my boss. People are talking about using Ethiopian birr. People are raising about using Ethiopian birr in neighboring countries like Djibouti, Kenya, or Sudan, elsewhere. I see the risks of making unilateral decision as such, but I am in dilemma because these hard currencies are becoming hard currency because they are freely circulating. They are becoming hard currency because they are freely circulating in the globe. So what is your position on this? Thank you very much.
Thank you. So to the panelists, I think you all know your questions. Can we start with Frezer now?
Thank you. Just to address some of the questions that were directed towards me. So the first question is related to access to finance and liberalization of the financial infrastructure. So as has been said, there is huge population in Ethiopia that is un or underserved. And in order to address this issue, the government has implemented national financial inclusion strategy through 2 rounds. The recent one has been refreshed recently, and we are witnessing that there is significant improvement in terms of improving access to financial service, particularly from the perspective of access to transaction accounts. But still, there is a lot that needs to be done. But in order to advance, financial inclusion, definitely, as has been said, the financial infrastructure has to be modern, and the space of the financial infrastructure has also needs to be, liberalized or opened up for foreign investment, and that's exactly what's being done. So, as you know, the telecom sector is being, privatized, and we are seeing, private, non-Ethiopian, mobile network operators in Ethiopia. And again, with the objective of advancing, financial inclusion, we are also, started to issue payment instrument issuer license for foreign, investors like, Safaricom. And this, opening up of the financial infrastructure to foreign investment is gearing up, and we believe that, it will further advance access to finance in our jurisdictions. But the most critical one is, the topics that we discussed before. That is, in order to advance, financial inclusion, the most key infrastructure I can say is the national ID infrastructure, because, any bank, when dealing with any individual, they need to properly establish the identity of that person or business, and in order to do so there is a need to have a unique identifier that is supported with biometric data and other mechanisms. So the advancement of all these things will definitely improve access to finance and financial inclusion in our jurisdictions. So the other question is related to the increasing volume of digital fraud. So as you know, most of the banking business transactions are currently being done using digital channels and digital platform. And one of the downsides of this shift is that we are witnessing increasing number of digital frauds being committed against innocent individuals that do not have the required level of awareness. And this is really very concerning, because we are seeing that people are knocking our door saying that I lost my 500,000 birr yesterday. So these things have becoming a common scenario, and I think this is a real issue that we need to address. And from my side, I think there is a big responsibility on the part of the financial institutions, in terms of really empowering them with the required information and adequate lesson on how they should transact, what are the things that they need to do, and what are the things that they must refrain from being abused by these fraudsters. So the consumer protection aspect is a huge element in that. And the other issue is the data management and the security aspect of the financial institutions has to be strengthened, and we have to make sure that we are adding up adequate security layers, so that the fraudsters will not take advantage of it. And the other issue is again with the issue of national ID. So most of the fraudsters are committing this fraud using forged IDs. So they use a forged ID to open an account, and when you track them, you know who they are, but the ID that they have used is forged, and you cannot ultimately trace them and make them accountable. So that's why really this national ID is really an important issue. And the other issue that we need to address is with the law enforcement organs. To what extent are the law enforcement organs aware of this issue, and to what extent they are really investigating and prosecuting and causing conviction of these fraudsters. So if the cases are being piled up, and if there is no investigation, conviction, and accountability, then this will be this will develop unfavorable situation in our financial system. So we need to really work from all these aspects, including the regulator, in terms of making sure that the consumers are protected in whatever manner it should be. For example, in some South Asian countries, So they have a law saying that, you know, for whatever digital fraud that is committed below a certain level, banks are required to automatically settle and, you know, pay, you know, to the customers, you know, whether it is caused by them or other, you know, issues. And then if the amount of, the money that is being, misused is big, then it will be addressed through the legal mechanism. So I think there is a need to have this kind of, mechanisms in our financial system. I think that's what I can say. Thank you.
Yeah, in relation to the SWIFT-like system that Ayalew was mentioning, and different initiatives going on which are not materialized, is an important question that you raise. I would say those initiatives who are somehow request duplication of labors will not materialize in future too. That's what I'm saying. And instead, why don't we use our own infrastructure and the other country infrastructure to interact to one another? And instead of thinking of a kind of one hub, one solution which can be used for many countries. I mean, if that was advanced, that would have been good. But from the experience that I have, the use cases has to be developed within the country. Then the other country, like our brother over there told us, between Kenya and Uganda, where they are using currency conversion scheme by their own. That is the real use case that pushes them to interact to one another. And such use case collaborations has to be developed within the countries, and that might be formalized later on as a regional payment scheme instead of waiting those initiatives going on that you are mentioning. And of course, for any technical or technicians that they are using, there has to be a political will at the end of the day. My sister, the one who is accountable, I would say both those who are working in the technical elements, as well as there must be a political will. Otherwise, it will be challenging. The one that the custom fee, for instance, one of the challenge between the countries, the fees that we are imposing are different. How we can, balance the cost against the benefit when countries are trading to one another? Those are things that they have to discuss, and there has to be a political will, which they have to take. The good example is the one that have been mentioned between Kenya and Uganda, and the one that I told you within the SADC region, where they are using it for cross-border among 11 countries, where they are settling with one currency. They sponsor the South African rand, they selected that rand, and everything is settled with rand. So these are the use cases that brought them together to devise that way. The one that is mentioned on cybercrime, security, and so on, I think it's good to have a kind of national cybersecurity framework where each company has to adhere. Recently, I have seen a document issued by INSA, where they call it version 2 for National Cybersecurity Framework. It entails every requirement that each company or bank or whatever has to maintain in order to make secure the platform. The problem is, I remember also the version 1 have been released some 6 or 7 years back. When you see the document, is quite interesting, and it's like the standard security schemes that we have in ISO 27001 or PCI DSS and so on. The problem is implementation, how we can force companies, banks, or whatever to adhere that standard is the one that has to be done. INSA has developed now the version 2 National Cybersecurity Framework, and its implementation, control, auditing, and so on has to be done by INSA based on the mandates that they have been given to make it secure. Otherwise, the journey of digital platforms has its own consequences, as Frezer said. Our people with less financial literacy, they might be exposed for unnecessary fraud and so on. Just someone will call them, just type this one and see on the string code, which will definitely pass the account from their, pass the balance from their account to the one who is calling them. And people will just do the way they are interacting. This is the lack of awareness, which is part of the framework that have been stated. And the system, those companies who deploy those channels and so on, has to be tested in line with the frameworks that have been developed by INSA. I think that these are those points that I took from my end.
Thank you. I don't know if I got questions. Did I get questions? I'll start with my brother about me poking the African wound. I'm an economist, and it's my job to see things ahead of time and to advise and provide clarity and cause discussion like we are having today. That's what I'm trying to do. That's what I do. My boss knows I give him problems all the time. I'm the one always trying to poke gaps in the policy. So what I'm trying to do here is, and I've done this in Kigali, in Uganda, we are having the same conversations, that my job is to get to the root of why we are not moving the way we should. Uganda, Ethiopia as well are resource-rich countries. We have energetic young people, bright people. We have natural resources, agriculture, commodities, rivers, natural sun, but our level of growth remains very low. So my job is to try to identify why is it that we're not growing at 8%, we are growing at 3%. So a lot of the conversations I have is for me to provide my insights and then bring them back home such that we can have these difficult conversations. Where I come from, they tell us that if you feel pain, you will leave. So for you highlighting that you feel the pain, I know my message has arrived, that there is more we need to do. We cannot get complacent by being happy with what we have today. We are way behind and there's more to do. So for me, I'm happy with that. I had this same conversation in Kigali in 2016. Some questions, why is Kigali growing very low? What are we doing wrong? And we had the same conversation around labor productivity. In Kigali, they felt that they had young people, they had a big population, they were talking about a population dividend. And I said, that is not true. This is not a population dividend. These youth are a problem because they are not well educated. You have a youth who cannot make anything with their hands. They cannot add value to the economy. They are just consumers. And so I said, no, the first thing we need to think to appreciate that it's not a dividend, it's an obstacle. So to address it, we need to do capacity building and improve these youth before they become a dividend. So for the past 5 years, Kigali has been putting a lot of emphasis on educating youth because we correctly identify what the problem was at the beginning. And so if you go to Kigali today, the leadership, the people who are running organizations in Kigali are 35, 36-year-olds, but highly educated because that was well diagnosed at the beginning. So it's the same conversation we need to have, knowing the root cause of Africa's challenges and being very clear on what they are will help us address the Honorable MP's issues. Is it that we don't understand the politicians or the politicians don't understand the technicians? Is that we must have difficult conversations first. When we have these conversations, the self-assessment will be deep, It will be meaningful, and the solutions will have impact. So don't take it that I'm just poking holes. I poke holes such that we can have these deep conversations early on. Now, in terms of financial exclusion, whether if we embrace global currencies, digital currencies, technology, we do financial exclusion, yes and no. Yes, in a matter because already a number of us are excluding ourselves from our local economies. We have Netflix, we use Disney Plus, we use WhatsApp, we are moving to other platforms that are different from what is the average person is using. Personally, I buy a lot of stuff on WhatsApp. It has an embedded application for PayPal to pay within WhatsApp itself. So I can buy things without using the Uganda shilling as a currency. So you find that we're already seeing that there is a shift to these digital, big data, big tech platforms, and it has implications. So one of the things we need to be thinking about deeply is that as China rolls out its digital yuan, most of us buy Chinese products. It is going to mean that, by and large, we shall be using the digital yuan, not the digital birr, isn't it? And so we need to be mindful that that's going to have important implications for us here, that then if we are not able to see what products you are buying, then how are we going to tax? How are you going to get revenue? How are you going to create jobs? So it is a two-way view that we need to have. We may want to digitalize to allow our integration, but we have to be mindful that yes, exclusion is already happening. It may continue, but how do we harness how we understand technologies to protect, to have a digital boundary in the digital space for our economies? It's also an important aspect to have. We are seeing global decoupling. China has set up its own SWIFT equivalent, Union Pay, which is, I know in Uganda, that's everybody's, many traders now use it for commerce. India has recently launched its API, which is also an integrated system they are rolling out. Now it's, I know it has reached the Middle East, and in a very short while, API is also going to be common in Africa. Now, that means that for Africa, we are going to be using 3 systems. We shall have SWIFT, or Visa, and MasterCard, which are the brands that lead. Then we shall have Union Pay, and then API. There is no African equivalent. So again, we are at the mercy of 3 major economies. We are at the mercy of China, India, and the US. And this is where we are saying it is important for us to think deeply about having our own infrastructure for African markets, because that is where the big markets are going. They are moving to control their own. And just to touch on the bottlenecks a little bit, why is it that integration seems to be not working? It's actually working. And we are not saying that the efforts of the politicians have done nothing. I think we are here because the efforts of the politicians, the legislators have allowed us to have these conversations, and they have put certain things in place. But what we are questioning is, can we go further? What we're trying to highlight is there more room for us to do more to extract the value that we need to get? Because you asked a question, Hikmet, that is integration, does it create national wealth? In the beginning, yes, there will be some meaningful numbers you will see, because capital will come in, you will do stuff, but after about 5-10 years, that usually moderates to a slow number. So there is, and we saw that for Uganda, we have seen that in Kigali as well, where opening up the country brought in new money that has allowed different things to be done. But after a decade of extra money, you find that the economy grows and stagnates. And so it's always important to think ahead of time, such that solutions or some of these obstacles can be anticipated and managed before they come into their own. And finally, I'll speak to a question around how do we bring the ordinary person on board? For Uganda's case, we have 3 ways this has been done. The central bank has a financial inclusion team that prepares messages in local languages, goes out to the villages to speak and explain. And the governor, the deputy governor on a regular basis goes out to try and speak and explain as far as you can do in economics and markets to the average person. We also have the same thing under the Capital Markets Authority, where they do investment literacy to try and explain how markets work and explain what is happening. And the president is also a political economist, the president of Uganda. So he also adds his voice and his interpretation of what is going on. So there has been a lot of conversations, and this is how we have domesticated and tried to cascade information to the ordinary Ugandan. And this is, I think this is something that you also have. I've seen FSD Ethiopia, we have FSD Uganda as well, which is a big promoter of financial literacy and explaining matters around liberalization of sectors. So by and large, those will be my takes. I hope I've responded to each one of the questions that I was posed. If not, I'm happy to have a coffee and we discuss further. Thank you.
Thank you very much. It's hard to be the last person before lunch, so I just want to try to make it brief. I think whether we like it or not, we're going to find ourselves in different world. 2 things is going to change: the world of politics and the world of technology. I mean, we have lived through liberal democracy for 30 years, 91, 2020. Now everybody is finding a way to challenge, because now it's called this liberal hegemony. So there will be multipolar world, now one. The second is technology is going to upset the whole things. Technology creates inequality, whether we like it or not, that's a fact. Without gunpowder, there was no slavery, there was no colonization. Without steam engine, there wasn't such transportation, huge transportation. So now there is a fourth industrial revolution coming. It's upon us. So are we going to join it or be on the receiving end? I mean, now Amazon is bigger than the whole African, I think, GDP. It's huge, trillion. They will have, I think GDP is, I don't know the number, but it's not even 500 billion or I don't know, something. But the trillion companies are there. Google is a monopoly, whether we like it or not. Tomorrow we cannot get into the market, with our own technology. So now what is missing? If we're going to get into the new world, we're going to find it's a conflicting world, and then are we ready for that? What needed to do? So Worko over there, he did ask, okay, you said scared us a lot, but what is the problem? If you are in 1963, in Africa whole, the topic we're discussing was discussed. One, we need, political empowerment, the rest of countries which wasn't under colonization, we have to liberate them. Second, without economic freedom, empowerment, the political freedom has no meaning. Without our education system, without our thought process, we're not going to have our freedom. The last was our common defense policy. This was even before European Union and so on. But we didn't deliver that. It is in 1964 that they thought about, discussed it in 1963 in Africa, and then went to Khartoum. In 1964, they established African Development Bank. Now we get excited that the Chinese and BRICS are going to create, an alternative to World Bank. We had already, but we haven't, just made it, successful. We haven't delivered it. So why we are dependent on the World Bank when we have Africa Development Bank? Nobody is mentioning. This was before Chinese. So that's one. So what is missing in Africa is we don't have a man of thought. That's the biggest problem we have. Everything. If you see the global publication in Africa and sort of thing, we have so many PhDs, so many things. I don't know, maybe 1%, 2% of, the global intellectual input. So unless somebody tell us that this is what's going to happen, this is going to, come upon us, we're not going to be prepared. Because we talk about adoption now, all the things. But if we adapt the technology, the optical fiber comes from things, the server comes from things, the internet, even our email is stored in Google. They can read it, server. So, how can we be able to, innovate and also imitate? So we have to think about innovation. I mean, in Ethiopia, a successful company, Safaricom, I see it as an innovative company. They come up with their own idea and then they change it, the region and so on. Ethiopian Airlines is doing that kind of thing. So now we are 60 years after the African Union discussion. We're discussing the situation we have been here. So now what we need to do is we have to think. Are we still heading to more dependence on somebody's optical fiber, somebody's server, somebody's email, somebody's, so what it, it's just we're pretending that we're doing so. So the world is changing. We need to, because now, for example, the currency issue has been raised. Ethiopia currency is already the East African currency. Had it not been the government national bank, we can use it anywhere. A good example, let me tell you. During COVID, my sister had 3 kids, and then one was tested positive mistakenly. So she went to Rwanda. And then there was no choice, so I have to take it for her. 6 years kid. I went to airport and sort of thing. Nobody asked me, whether she's my kid or not. But when I passed through that X-ray gate, I forgot 4,000 birr, this 200 note in my pocket. So I was stopped, that's illegal, you can't take this money out of this country, and then I have to leave 2,000 birr and then take 1,000. What kind of this policy is it? Why do we need to trade with Djibouti, with Kenya, and so on, when they are ready to accept our money? When I go to Djibouti, I have to go bank and then beg my bank, make a lot of things, and they ask them to give me $500 to travel. But rather than $500, if I was given 30,000 birr, I can go and then get all the service, pay my hotel, a meal, and everything. So it is, without the men of thought, without the men of ideas, I think we're just pretending to be imitating some other people and then to make it happen. Africa has got an opportunity. We've missed the first agricultural revolution, industrial revolution, and so on, the technology. Now we have the opportunity to let all our people think, experiment, come up with that idea, and then not only deliver to us, to the world. So that's what I'm saying. We need men of thought. We can change. This is an opportunity. It's a narrow window of opportunity transition. We can jump and back, join the world, or miss once again the force. Thank you very much.
No more questions, right? In the interest of time. Again, I won't try to summarize, but the last speaker, Yared, gave us a little bit of hope. I want to quote President Ruto again. I think recently he said something like, no more will 54 African leaders travel to Africa, Russia Forum, Africa, US, Africa, Turkey, etc., etc. And that AU will be representing us at these forums. Everybody knows the last frontier is Africa. So how do we capitalize on that? And I think the discussion today highlighted it's not the only responsibilities of the legislators, but the technicians also. Everybody in this room, as leaders of your various organizations, has a duty not only to think about today, but tomorrow also. So I'll leave you with that. Please help me thank the panelists for today. So it's lunchtime, we come back. Oh, you're here.
Let me invite the panelists and the moderator to take a picture, please. Thank you very much. Yes, right here on the stage. And you as well. Yes, yes. Ladies and gentlemen, I did promise that we're going to have a wonderful moderator. Please give a warm applause to our moderator. Thank you very much.